Hi, everybody. Good afternoon, good evening, and good morning, wherever you are. Thank you very much for joining the Bottom Club today to our AI Summit featuring executive from top tech companies revolutionizing the world as we speak. My name is Yossi Garmazi, and I'm joined here by two good friends of mine, Alvaro Jimenez and Erez Eisenstadt. Alvaro?
Good to be here, Yossi.
Happy to be here. Thank you for having me.
Yeah, so today we are fortunate enough to interview none other than Rick McCathron, CEO of Hippo Insurance, a company that revolutionizes the home insurance space. Hippo makes insurance faster, smarter, and more proactive by using technology and real-time data. They help homeowners to get a better coverage. Before Hippo, Rick also served as the CEO of First Connect Insurance Services, CEO of Superior Access Insurance Services, and other executive roles within the industry. So, Rick, thank you so much for joining us today.
No, thank you so much. So glad to be here with you, gentlemen, this morning.
Our pleasure. And Rick, I want to start with an interesting question. You have worked in the insurance space for a while, Mercury Insurance, First Connect Insurance, and Superior Access Insurance, and now in a startup. But what initially led you into the insurance world?
It's interesting. When you talk to most people, they will tell you that they never really planned on getting into insurance. I am one of the few exceptions into that particular space. So I grew up in an independent agency family in Southern California. So my stepfather and my two brothers and sisters worked within the insurance industry.
That's fascinating. And having worked with large insurance companies with lots of bureaucracy, what key lesson helped you to push Hippo to innovate even faster than ever before?
That is one of the challenges I think our industry has is there is a lot of bureaucracy, and oftentimes executives within our space tend to be more concerned with their particular business units as opposed to with the overall success of the company. And from our perspective at Hippo, the overall success of the company comes from creating better outcomes for our customers. And that is something that we find a bit different at Hippo, certainly something that Insurtechs have embraced, things that we're starting to see more of the traditional large legacy incumbents starting to face, but it is certainly something that we very much embrace here at Hippo. And so put customer first, worry about the big picture, and not worry about individual business units.
Definitely. And as I mentioned, you worked in the insurance industry before, and the insurance space is typically known for, the 100, 200 years companies. But yet you decided to join Hippo, which is sort of a startup in a way. So I was just wondering, what made you want to be part of this company mission and growth for the long term?
It was an interesting journey, and you're right. I've been in the insurance space for a long time. I'm on my 33rd year within insurance. So I've seen everything from large insurance company, small insurance company, underwriting companies, distribution companies, the whole gamut of insurance organizations. The part that really motivated me to join Hippo, and it was very much a startup. There were 10 employees in the company. We had this little tiny space above a restaurant in Mountain View, California. And the idea really excited me about making sure we're creating better outcomes for customers. You'll never hear us at Hippo say we're trying to disrupt the industry. The insurance industry has done amazing things for hundreds of years, as you've mentioned. But what is very important to us is make sure that we're modernizing insurance, because every industry gets modernized over time, and Hippo's doing its part in that modernization. And that's what excited me about leaving the larger, more traditional companies into an environment that we could modernize quickly, iterate quickly, and again, put that customer first.
That's super interesting. And I want to take you actually now to the time that you joined Hippo. Hippo is a home protection platform aiming to help customers when they need it the most. You have said that the best claim experience is avoiding claims altogether. Can you explain it further a bit?
Most people know Hippo for its homeowners insurance product, and that's what I'll focus on today. But Hippo actually is a platform for not just Hippo, the MGA, but also for other MGAs, for them to get their unique products into market through our hybrid fronting platform, which is Spinnaker Insurance Companies. We actually support 30 different MGAs within Hippo that we don't manufacture. We're merely the platform to let them get into market. So that's a big piece of the business, but just to sort of align everybody around that, I think it's important. One of the MGAs within that is Hippo, the homeowners insurance MGA, and that's what I'll be focusing most of my comments on today. From our perspective, you're 100% right. We want to partner with customers that believe strongly in the concept of how do you help me, insurance company, protect my home? We call it holistic home protection. The idea of home insurance is just a piece of how you protect a home. There's lots of other aspects that are very important. First of all, home warranty, as an example. If you have an appliance breakdown in your home, that's not covered under home insurance, but that can be a very expensive cost. Think about an air conditioning unit that might cost $10,000, $15,000. That's a large claim. So that's a piece that isn't traditionally addressed by insurance companies. Then the third part of it is home services. So proactive preventative services to make sure that you avoid things from happening. So you can oftentimes avoid a claim by noticing something when it's very small and fixing it when it's very small. And so what we did in the early years of Hippo is we very much focus on, is there technology that helps us and helps the customer partner together to avoid those claims? So recognizing them when they're very small instead of when they become very large. And I'll give you a few examples. So first of all, our CFO, as we were on a call in our early stage of our company raising investor rounds, he actually had to jump off the Zoom call because he got an alert on his phone from a Hippo smart home device that said there was a leak under his kitchen sink. So he ran into his kitchen, and sure enough, one of the pipes had popped off the coupler and water was spewing out. He was able to turn it off, clean it with a mop, took him 10 minutes, have a plumber come out, replace the pipe. There was no home insurance claim. So as he came back and he told the investor what had happened, the investor was convinced it was a setup. The investor said, "Oh, that didn't really just happen," but it did. And that's an example of that. Or I had a friend who went out of town for a couple weeks and their washing machine hose broke and it spewed water all over. It was a $30,000 claim. If you'd have one of those devices in there, you would have noticed it very, very quickly. And yes, there would have been some damage, but it would have been minimized because even though he was out of town, he could have called me or another friend and said, "Hey, can you go over and take a look?" And it wouldn't have set that 2 or 3 inches of water wouldn't have set in their home on his hardwood floors in a Texas summer heat, which really created mold issues and everything else. So it's that proactive nature that we think is very important.
It's definitely better altogether to prevent it rather than battle it afterwards. Could save a lot of money for the insurer. And Rick, I can tell you that now everybody knows Hippo, but Hippo back in the day was a small startup. Now it's a public company. But I was curious if you can tell us, how do you see this transition for Insurtech startup to a publicly traded company that suddenly you have all this visibility and you can do things that you could maybe never even could have done before?
It's been an adventure. That's probably the best way to describe it. I would call it an amusement park ride that is a roller coaster. So there are lots of positives of being a larger publicly traded company. There's some negatives of being a larger publicly traded company. And I was at Hippo from the beginning. I was originally not the CEO. I was hired as its chief insurance officer to run the insurance portion of what we did, and then quickly became president. And then right after we went public, became the CEO. But we've gone through lots of different changes. So any of you that are working in a startup or an early stage company, just remember this: no success comes in a straight line. Success always has ups and downs, peaks and valleys, and you just have to continue to focus on what your North Star is. And with us, it was providing better outcomes to customers. And there were different phases along the way in which we thought that the company may not succeed. Ultimately, we got to a point where we were creating scale. We were writing, goodness, probably close to 600 million of premium, and thought that the benefits of being a public company would outweigh the detriment of being a public company. And so we went through that journey. But it does create a lot of uniqueness. Sometimes it's harder as a public company to fly under the radar and create a lot of really cool, innovative things because you oftentimes have to disclose what some of these things are. You also have to manage the company on a quarterly basis because you have quarterly earnings calls. And I think we've done a very good job of managing that, but still really driving strategic growth in the company. But you tend to do some things that are a little bit different if you're VC or PE owned, as opposed to if you're publicly owned, and just the way that you focus your time, energy, and efforts. But at this point, we're really excited about the success that we've had at Hippo. We turned adjusted EBITDA profitable last year. We're guiding to GAAP net income profitability this year. We've been growing significantly through the entire process of improving the underwriting results, which we've now successfully completed, but really has been an adventure. And there's been some great positive things, but also lots of challenges along the way.
Yeah, that's for sure. And you mentioned also HIPO proactive risk mitigation, like the incident that HIPO prevented at your CFO home. But how has this unique underwriting approach also impacted the loss ratios?
There's really two things that I think have successfully resulted in positive loss ratio performance and experience. And it took time. Yoshi, you had mentioned at one point that the incumbent insurance companies have been around for 100 years, in some cases 200 years. What we've tried to do is compress that timeline into a decade to really create both scale and underwriting profitability, which we've successfully done now, but it took a lot of energy and effort. The two things that I think most impact our ability to have a positive loss ratio, first, the interactions we have with the customers and our use of proactive preventative devices, conversations, marketing, all different aspects of telling a customer, we're not just here when you have a claim, we're here before the claim. And that is one thing that has helped us. The second piece, as an Insurtech company, the tech platform we use allows us to iterate very, very quickly on changes. So right when I took over as CEO, we recognized that we had to get the underwriting profitability into the 60s for homeowners insurance. And to do that, we had to have dozens and dozens of rate changes, rate filings, refine some of our underwriting criteria, just a ton of traditional work. Over a year's time, we did more than 140 rate filings and product filings and integrated those and implemented and went live with more than 140. As insurance executives who might be paying attention or insurance people that might be paying attention, like it's really, really hard to do that in that short of time. The technology really made a difference. Our ability to read the data, interpret the data, put the data into production is a matter of weeks, not months. And we can stack different things on top of one another and put 2, 3, 4 changes in place at the same time. So it's not uncommon when we see something that we need to do, even if it requires rate filing. Once the rate filing is approved, we're usually live within a week. And that's where the technology part of Insurtech, I think, helps.
That's amazing because at the end, specifically in today's world, it's all about using data and using it as fast as possible. And yeah, Rick, I have one last question that actually related to Erez. Before I pass the mic to Erez, what advice would you give to a new entrepreneurs entering the Insurtech space these days?
I mentioned before we got on the recording that I'm pulling for all Insurtech companies out there because the space is massive. The opportunities are huge. There's more potential and more opportunity than any of us can do individually. And as Insurtechs, so goes all of us because the industry paints us all with a pretty broad brush, even though we're different. I get compared to Lemonade and Root all the time. Our companies could not be more different. We do very different things beyond just different product lines, but our distribution, our strategy, everything is very different. But you watch our stock price goes up, Root and Lemonades goes up. R goes down, Root and Lemonades goes down, and vice versa. All of us are intertwined together. The advice that I would give is really have a vision, know what you ultimately want to achieve, stick to that vision, but adjust and iterate along the way. Know what's working, know what's not working. Try not to boil the ocean. One mistake that startups make is they tend to throw everything they can against the wall and see what sticks. That distraction means you can't build anything significantly. You're ending up pulled into multiple directions. It's the old adage of how many balls can you have in the air at one time before they start hitting the ground. And that's one of the things that we do at Hippo. We develop fast, we iterate fast. If it's not working, we kill it fast. If it is working, we double down. We make sure it's working before we move on to the next thing. And so I think that focus is key for a startup.
So basically, you say be relentless and be very proactive as Hippo. Rick, thank you so much for answering all of my questions. I learned a lot. It's always a pleasure. And Erez, without further ado, the floor is yours.
Hi, Rick. Thank you, Yossi. So you recently announced a partnership where Westwood, a Baldwin company, is acquiring Hippo's homebuilder distribution networks, and the NSI, which is Hippo's managing general agent, also formed a new agreement. What does this partnership mean for Hippo business with new homebuilders?
It was a great outcome for both Baldwin, its subsidiary Westwood, and Hippo. This kind of goes back to what I said. If you do things together, you can generally find synergies where 1 + 1 can equal 3. And that's exactly what happened in this strategic partnership. So first of all, there were two real strong players in the distribution of homeowners insurance through a tech platform for new construction homes. It was us and it was Westwood. Now, of course, somebody who buys a new home, they can go to State Farm and Farmers and Allstate and all different kinds of companies, but both Hippo and Westwood had built real technologically forward distribution capabilities. And one of the things that differentiated Hippo was Westwood is not a risk-bearing entity. They're a platform provider, they're an agency and a partnership management organization. Hippo, we were that, but we also are a balance sheet through Spinnaker Insurance Company. We manufacture our own homeowners insurance products. And as we started having these conversations, and we had and have a strategic relationship with Baldwin already. So MSI, as I mentioned, we have Spinnaker Insurance Company with 30 different programs, 19 partnerships. MSI was and is one of those partnerships, and I think we have 3 or 4 programs on that we support MSI already. So we had the relationship. We were looking to expand that part of our relationship, but also looking to create that 1 + 1 = 3 on the builder side. So we said, look, Baldwin, why don't you and Westwood take the distribution capabilities of what we're doing? And then Hippo will take the product manufacturing and the underwriting risk of those new constructions, which we were already doing, and give us, instead of competing against one another, cooperate with one another. So if you look at it, Hippo had about 5 of the top 20 home builders on the platform. Westwood had 15 of the top 20 home builders on the platform. Collectively, we have 20 of the top 25 home builders. Hippo was taking a disproportionate amount of risk on the 5 that we had. Baldwin was taking, through Westwood, no risk on the 15 that they had. So now we've sort of merged that operation, and Baldwin, through Westwood, has the distribution for all 20, and we have the risk bearing for all 20 spread out across Hippo and other carriers. So we just created immediate diversification with a partner that tripled the size of our funnel. So our funnel now is much larger and much more diversified, and then we take a percentage of all the risk that is going through that. So that worked really well. Then on the Spinnaker side, on the MSI side, we now have longer term strategic contracts with MSI where we are the fronting carrier and the risk bearing partner for several MSI programs. So this was a situation where it benefited us on the Spinnaker side, benefited us on the Hippo homebuilder side, benefited Baldwin, MSI, and Westwood the exact same way. This was just one of those situations where it just made perfect sense for both companies.
That's amazing. So you were essentially using the MGA as a growth hack for both companies.
It really is a funnel hack, right? So it's the funnel now is a lot bigger, therefore the growth is there. We could have gotten the growth over time, but we would have had to expand our own funnel, and we would have had to probably write more risk in a less diversified way, which is not a great idea if you're an insurance organization. So by doing this, it definitely accelerated both their longer term prospects and our longer term prospects. So much so that we just had our investor day guided to very large numbers over the next 3 years.
And also in terms of risk diversification, recently Hippo sold subrogation rights related to the major wildfire claims, netting $11 million. How does that fit into the broader capital and risk management strategy?
It's a good question. We've actually gotten this question quite a bit, so maybe I'll take a half a step back. When you have homeowners losses or losses in any business, as an insurance company, you have the right to subrogate against who was at fault for these, whether it's a car or a home. It became very clear to us what the proximate cause of the Eaton wildfires was: faulty electrical equipment by the utility. It became very obvious to that. And so we believe strongly that we and all others that had the billions of dollars in claims probably has subrogation capabilities against the utility company. And so that's when the calculation kind of started, because what you have to think about is, yes, we believe we will get some money back for these claims, but how long will it take? What percentage do we think we'll actually get back? Will the utility company, it's a private utility company, will it be in business in order to pay those claims? When do they exhaust their insurance limit? There's a ton of uncertainty around sort of what would we ultimately get. So what we did was we said, look, we believe we will get X back over time. Then we started doing time analysis, time value of money, and say, what's that dollar's worth today versus 3 or 4 or 5 years from now? Then we started seeing, well, if we reduce the exposure that we had because we get this money in, does it hit our reinsurance towers? Do we have to pay a reinsurance fee in state? So that went into the calculation. Then what went into the calculation is, who else has claims against the utility? Will they be able to pay 100 cents on the dollar? Or are they going to pay something far less than 100 cents on the dollar? And once we did that calculation, it became clear to us that we could have done it ourselves, taken 3 years, but we likely would not have made more money on the subrogation rights or the subrogation results. So we sold them, take the money up front. That gives us an extra $15 million that we can use as capital and capacity to continue to grow our Spinnaker business and our Hippo business. The Palisades fire, we have not sold our subrogation rights. That one is less clear as to who the liability is. So in that one, we're still sort of planning on going it alone, so to speak. If it changes, we might sell it. But we were one of the first insurance companies that sold subrogation rights for Eaton, but a lot have followed since then.
Thank you. So there is a distinction between the different cases within that whole area.
Yes, that's right. It's hard to subrogate against an act of God, but it is easier to subrogate against an act of man. And that's really the difference here.
Thank you very much. That's all for me. Alvaro?
Thanks, Erez. So Rick, very interesting what you're talking about, everything that's going on in the sector, and in particular, the changes that are going right now in the sector with climate risk increasingly affecting underwriting models. Can you tell us a little bit how Hippo is adapting to this higher frequency of severe weather events, regulatory shifts, places like California and Florida where we're seeing these events?
It's a challenging time to be a homeowner's insurer, and for lots of different reasons, and you correctly identified many of them. One thing to keep in mind is the way the industry normally handles increasing risk and exposure is they reduce coverage for that in one way or another. They either exclude coverage for something or they raise the deductibles for something so they can sort of rebalance their expectations on premium versus risk. The problem is when an insurance company does those types of things, although it helps the insurance company, it actually hurts the customer because ultimately the customer is the one that is bearing that additional exposure, either through not having insurance and sort of going it bare or having a much higher deductible. But insurance companies have to do something in the short run. And I think many of us, Hippo included, has increased deductibles, added things like roof schedules for hail losses, severe convective storm losses, those kinds of things. But I don't think that's the long-term solution. I think the long-term solution is to actually create, one, a separate risk pool for specific types of weather-related exposures, and two, create an environment in which homes, when they're being built, are being built in a much harder fashion, hardened type of homes. And I'll give you examples. If in Florida, we write a lot of new construction homeowners insurance. We've had 4 hurricanes go through Florida since we've been writing new construction home insurance. Our claims are a fraction the amount of what an older home or traditional insurer would have experienced, like for like, because those homes are built to modern building codes, the trees are much shorter, all of these different kinds of things. I really think that that's going to have to happen throughout the country. It's going to take years because you have existing homes, not just new homes. But we really have to get into a mechanism where you have to harden your home against fire, against wind, against other forms of severe convective storm, against flood. We have to build differently, but that will take decades. In the meantime, I think having risk pools that are specialized with specialized risk dollars makes sense. So take earthquake insurance. Back when I started in the industry, Northridge, a very large earthquake in Northridge, California, there was a very large insurance company that almost went out of business, would have if I think AIG came in and sort of bailed them out and bought the company. But that's because earthquake was a covered peril in a standard homeowners insurance policy. And so what happened as a result of Northridge is earthquake started to be excluded. As I mentioned before, the first thing insurance industry does is exclude or change deductibles. The problem was there's still earthquakes in California and customers still need protection. So it created the startups of their day, like the GeoVeras, like the Palomars, to create companies that were specific to a specific peril. GeoVera was earthquake, and they went out and got risk dollars that were dedicated to that one particular risk peril and really decoupled earthquake insurance from homeowners insurance. I think we're going to see the same kinds of things in fire. We're already starting to see things X wildfire, just like we see things X wind along the Gulf Coast. I think we're going to see similar things with severe convective storms. I think we're going to see smart, young parametric companies come in almost as a deductible buyback for specific perils against specific risk pools, where we take that risk and we separate it into a little bit more from the customer, a little bit more from a separate risk pool, a little bit less from the standard insurance companies to really spread and diversify that risk. And I think that's what's going to have to happen over time because the climate change isn't getting better. It's not going to stop. People still need their homes and other items of property insured. We just have to think about a smarter way to protect and mitigate. Going back to the Hippo, proactive mitigation is better. You can do the same things with hardened homes.
Absolutely agree. And also with the population growth that we're seeing, well, people are still going to need to live in places. And it just so happens that the 2 very nice places in the US are California and Florida that are prone to these conditions. So taking you a little bit to the metrics of Hippo, you recently announced a 3-year roadmap that stands out in both Insurtech and tech industries. Can you tell us a little bit about this roadmap and the factors that influenced how you came up with it?
Happy to. And we were really, really proud to share our 3-year roadmap with the street, with investors, and the general insurance community. And taking a step backwards, the last investor day that we had was almost exactly 3 years ago, and it was right after I took over as CEO of the company. And we put a 3-year roadmap out at that time too. We hit or exceeded every financial milestone that we said we were going to hit 3 years ago. Now, I will tell you, it was not easy to do. There was lots of challenges, lots of difficulty. We had a few very bad quarters. Our Q2 of 2023, we had, goodness, close somewhere between 60 and $80 million of hail losses from 22 hail events. Like, it was very difficult. In fact, that there was a period of time there where I stopped writing all new business entirely. A period of time where all the articles that you would read is this is the beginning of the end for Hippo, all of these different kinds of things. And we had some tough decisions to make and tough actions to take. But we did. We took our medicine. We focused on improving the underwriting profitability. And ultimately, we hit the goals we said we were going to hit. This go around, we put the same types of 3-year goals out there. We put a goal for growth for written premium, which was $2 billion, about double what we have today in 3 years. We put a growth of profitability of $125 million of adjusted net income. And to show maturity of us as a company, we put growth on return on equity of 18%. All of which are significant goals, significant growth measures of profitability and size, but ones that we have a very strong conviction that we can hit because we sort of took our medicine before, focused on profitability, reinvented ourselves a little bit, and bringing Spinnaker much more up into the forefront to help other MGAs get to market. One of the reasons we do that is we take risk on some of these other MGAs and they're diversified product lines. There's BOP, there's auto, there's home, there's commercial property, there's all different kinds of product lines, excess liability. All of this creates a more diversified risk pool in which allows us to have a more favorable loss ratio long-term with fewer spikes based solely on weather. If we look at Spinnaker over the last 10 years, Spinnaker just hit its 10-year anniversary. We bought the company about 5 years ago. Spinnaker over the last several years has been running loss ratios in the upper 30s because of that diversified portfolio. So we're going to double down on that. And part of doubling down on that means that we can double down on Hippo's home insurance product because we can spread that risk across other risk pools as well. So we're excited about it. I think we got very positive reaction from the market, but this is the type of thing that we're committed to hitting. We as a company never say anything that we don't think we're going to achieve. That is also a piece of advice you asked about startups. Never exaggerate, always have strong conviction that you're going to hit what you're going to hit and share those numbers, be very transparent. And I think ultimately investors of all types, whether they're public or private, really you build credibility with them.
You just mentioned it, credibility, and I suppose that the way you treat customers reflects on your customer lifetime value. Can you tell us how Hippo does it slightly different than the traditional insurance carriers?
Yeah, we try, the sort of our premise on the Hippo home insurance product is truly are those partners. And I will say we make mistakes sometimes too. I think every company makes mistakes, but when we do, we certainly try to correct the mistakes. And we've gotten better and better and better. This goes back to the other insurance companies have had 100 years to build their process. We've had 9, and we're just hitting our stride. But making sure that we try to put the customer first without sacrificing underwriting integrity, quality, and the contract, I think is important. There are times where customers would love us to pay a claim that's not covered, but we have a responsibility to all of our other customers to make sure we're adequately capitalized to pay their covered losses. So, but we really do try to put the customer first in everything that we do, both in design and output. One advantage that we have that I don't think is widely known is Hippo has a large agency within it. And so if somebody comes to us and says, Rick, we want Hippo home insurance, if we're not the best solution for that customer, then we're happy to sell them somebody else's homeowner's policy that has a product that is a great fit for that particular customer. That avoids the need of putting square pegs into round holes. We never optimize for Hippo. We optimize for the customer. What is the best product we can sell the customer? Sometimes it happens to be Hippo. Sometimes it happens to be I don't know, Travelers or Safeco or some other companies that we might partner with.
It's really great to hear that you put the customer in the forefront. So now we're going to enter the last part of the interview, lightning round. So speed questions. First one, if you had a chance to have coffee with any historical figure, who would it be and why?
Oh, so I have a degree in history too. So this is actually something that's exciting to me to talk about. But I think if I had to pick one, it would be Abraham Lincoln. And the main reason for that is he lived in a very difficult, trying time with lots of change. He had a strong view of where the country should go, and in my case, where the business should go. But sometimes you can't just wake up one day and be there. There's a lot of counter prevailing winds that can kind of push you off course a little bit. And I think he did an exceptional job of navigating a very difficult, really difficult situations, plural, and still took the country into a much better place. That's exactly what we're trying to do at Hippo. So it would be great to sit down and brainstorm and have him be a mentor of mine going, how did you get this particular thing passed? How did you get the people that were so against it at least built a consensus that got you where you needed to be? Because every insurance company has this internally. Underwriting, claims, and marketing are at conflict often. And so making sure that you tend to look at the big picture and how do you navigate that to get where you ultimately want to go, I think is something that he did masterfully and would love to learn more from him.
Just to add on that, there is a really good Broadway show. I mean, it's without Lincoln, but it's with George Washington and Hamilton. So great Broadway show indeed.
I need to see it. No,
Yeah.
that sounds great. Yeah.
Outside of work, you must have some hobbies, right? So what do you do to relax?
I do. I like being outside. So although I'm an ex-college football player, but I love gardening and cooking, mostly gardening because I like to eat, but cooking, but things outside too, hiking, skiing. I really try to get outdoors as much as I can. It's not uncommon for me to take my team one-on-one Zoom calls, not on Zoom, but on the old school audio, walking around the block taking these particular calls because I love to be outside. I feel like when I'm walking, I think better. And I think it's always good to breathe fresh air and get some exercise. So those are what I do most of the time.
And if you had to say which is your favorite movie, which one would it be?
Oh, Jaws, for sure. It's the only
50th
movie I could watch
anniversary.
6,000 times and enjoy. Why? I have absolutely no idea. But it is just it's the movie that I could just watch over and over again. Not the original Jaws, not the sequels. That's important. Just the original Steven Spielberg Jaws.
Agreed, agreed. And now we're in the 50th anniversary. It's also you could use it as an excuse to watch it again.
That's right.
Thank you so much, Rick, for answering all my questions. Yossi, back to you.
So, Rick, thank you so much again for joining us. It's been really fascinating and insightful. We learned a lot from you about the insurance space and how Hippo keep revolutionizing and trailblazing the space. So, thank you so much. We appreciate it. And for everybody else in the audience, stay tuned. We have other amazing episodes with the CEO of Sentinel One, Armis, KL, and even a few VCs going to join us, like Anderson Horowitz, Inside Index. And yeah, it's going to be very interesting. So, Rick, always a pleasure, and thank you again.
No, thank you. This was a lot of fun, guys. I very much enjoyed it.
Thank you. Bye bye.
Bye bye.